Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
So guys, let's take a look again on the gold market. So gold has become the victim of the Fed statement on Thursday and is crushing non-farm payrolls release that we've got on Friday. So actually, as any other market, including the euro currency that we discussed recently. So in general, if we'll take a look at the longer term analysis on higher time frame charts and monthly and weekly, this drop actually is a just continuation of the same logic background that we have there, and it brings really nothing new to long-term analysis, because there, even 1 month ago in June, when the collapse has happened, I mean this one, we said that the situation looks bearish, and technically it suggests downside continuation. Currently it's very difficult to find the reasons that could really break this context. I mean fundamental reasons. And when we're dealing with this retracement, we hoped that, well, maybe market will be able to show the deeper retracement. Maybe it will climb to the 1850, maybe even 1870, completion of the ABCD, forming the guarantee steeple to sell. But anyway, that should be a temporal action. That will be just retracement in a downward action. As you know, any retracement is quite unstable thing. It could be interrupted in any moment, and things happen so that now it has happened by the external impact with the Fed comments. So you probably know about that. So anyway, retracement is over here, and unfortunately, although we have got the grabbers, we've got this recently strong action, and we hope that at least 1840, 1845 might be reached. But no, that hasn't happened, and market just collapsed, crossing the consolidation almost of the 2 months standing in flat action. So now market just comes closer to the bottom. Nearest expectation on the market is that the market should reach target around 17 even. That's the nearest destination point that, well, at least mentioned by Oanda analysis. So they're also watching for a 17 even. In fact, we have the sequence of the long-term targets that we have specified in the weekly report, so you could see it, starting from the 1650. I mean, not the targets that you see on the daily, on the higher time frames, on 1650, and it will be area around 1540, and then it will be even lower support area. So, but first on the daily chart, we will be watching for 2 targets. First one is 1727 or 1730 and 17 even. That is pointed by Oanda. So why we have to turn to the high targeting here is just because, first of all, this ABCD pattern that was the foundation of our retracement has been erased with this drop. On the way down, market has crushed all the support levels that we have. And in a manner, in what the market has done is, you can see it's just, well, outstanding. This is not some kind of the gradual retracement like this one or that one. This is just crushing downside action, closing right at the bottom. Market is not at the result. It has no significant areas. So that's why currently time has come to take a look at the major extension. So as we're dealing with a huge bearish engulfing on the monthly chart, we should take a look at some targets that are provided by this pattern. And the first one will stand at the same 1730 area. This is COP of this ABCD pattern. This is probably a temporal target, nearest standing, valuable is only for a daily chart, because potentially we are watching for a 1650 as final OP of the same pattern. But we will come gradually because it will not achieve it just straightforward. Speaking about the sentiment, currently very difficult to find reasons and actually factors that could change the situation. Take a look by yourself. First of all, we have the stunning statistics. In the United States, really great statistics. Consumer credit, consumption, employment, inflation, so target on inflation, Fed target on inflation has been completed. Everything stands in favor of the United States dollar strength. Second, major banks expect the interest rate by the end of the 2021, 10-year interest rate on the bond market is around 2%. Just on Friday, interest rates have jumped for the 30%. So currently, if you'll take a look at the 10-year yield on the United States market, you will see it stands 1.3. But right here, before the collapse, it was 1%. So in one day, actually, rate has jumped for 30%. So it's very significant action. With this background, it's very difficult to find a reason why and how gold could show the upward direction. The one thing that theoretically we could suggest is if we will get the consequence of the poor non-farm payrolls reports. If it will be 3, 4 poor reports, in this case, indeed, situation could change for some period of time, because currently it is evident that Fed watching nothing but the employment. They need to close gap of the 5.56 million jobs till the starting of the rate change in 2023. Currently, the trend stands successful, so month by month add-on in employment close this gap gradually with the trend, and it's positive numbers, positive dynamic. But if this will be some breaking in this dynamic and it starts slow down, lagging behind the trend, the rhetoric could change and it could provide the support. The $1 trillion infrastructure pact that has been approved by the Senate on Saturday hardly will provide any significant support, I suppose, but it could trigger some retracement that we intend to use. So that's, in 2 words, the background that we have currently. For details, read the weekly report. Now what about technical picture and what we intend to trade, what we intend to do on the gold. First of all, we said that this will be the target, 1730. Market should take it out of these lows. No significant barrier stands here, no significant support areas. Market is not at the reversal, so it could continue downward action. Meantime, on the 4 time frame chart, price has completed few intraday targets. First of all, it has completed downside major ABCD, XOP, that we already talked about. And also, this is 1618 extension of the BC leg. Here, I draw it as a butterfly. Of course, the strong sell-off suggests that there will be some continuation. But since the approved infrastructure $1 trillion pack is not reflected yet on the price, and still market has completed a few targets, maybe if we get lucky, we could get some pullback here. Personally, I will be happy if we will get an action somewhere to the 1785. In this case, it will be clear bread and butter sell opportunity, and we could consider taking the short position, especially if we will get it in the way of the Gartner's cheaper to sell. If even this will not be the pure bread and butter, this market will reach it within the 2-3 closes above the 3x3, it doesn't matter. If even market will go to the upside with the longer term in the shape of the ABCD, anyway, that will be a good opportunity to consider taking the short position around 1785. So that's the moment that we intend to consider, and then the beginning of the next week. Let's see how market will respond to these areas and whether it's will able to show these retracements to this level.